Today, it's Edwin's Monday evening property rant. Hello again, it's Martin Hill from Digital Finance Analytics, World latest post covering finance and property news. Monday evening again, and Edwin's back. And Edwin, you look very cold tonight. How are you doing?
I'm as cold as some of the markets across Sydney, Martin. But hey, let's heat up the show and let's heat up the program with a new segment. You can't make this shit up segment. Yeah, welcome to dystopia. Story in 4 slides.
Well, that's right. I mean, it is pretty amazing. So this is the first one, right, which is relating to the battery. The battery provider has filed for bankruptcy. Oh dear, that's not quite what we expected. Well, some people expected it, but this is a significant impact with regard to net zero and all those things, and more importantly, power supply. Look at the second one. Aussies feeling the pinch. Don't use heaters in the cold weather, Edwin. Don't use heaters in the cold weather.
Well, that's it. The beauty of living in the mountains, Martin, is that you've got a lot of trees. You just have to be careful which ones you chop down and use as firewood for the fireplace.
Oh, it's absolutely crazy. And then this one, of course, prepare for 50% power bill jolt. The true cost of no rebate relief. Of course, the rebate disappearing. And of course, everyone's talking about the fact that prices are going to probably be even higher than expected previously. We'll come on to that in a second. And then this one, this is very much resonating with me because of my research, which shows that thousands, millions, in fact, of Australians have almost no cash buffers. Equivalent to 9.2 million people, according to Finder, has less than $1,000 in savings. And for those with less than $1,000 on hand, the average bank balance is $215. That's not going to get you very far, isn't it? It's also, meanwhile, 18% of people, equivalent to 3.8 million people, have nothing to fall back on at all. And I see that in my surveys too. So we've got this sort of compression going on, and the high cost of energy are a big part of the problem.
Yeah, and this is where I guess a lot of people are probably wondering what does all this have to do with with the property rent, and a lot of it comes back to there's a lot of things that you need to get in order and that the government's demanding of property owners, and we saw that. They kicked it off in Melbourne with regards to the from gas to pure electricity, in future demands on investors and also property owners. I mean, we're going to be hearing a lot more very soon about the efficiency rating, with regard, that are going to be they're going to have to form part of the contract of sale, and also the banks wanting to view these efficiency rating of a home that you're looking at purchasing, which will determine how much they're going to value the property, devalue the property by potentially if it doesn't meet their standard, because they're thinking of how much is it going to cost the buyer of the property in the short term, how much is it going to cost to get it up to speed to maintain the wear and tear and the low standards that they compared to now that they were built under. And let's face it, there's a lot of homes. I mean, we're buying homes that hardly anything's been touched on them, homes and apartments, since the 60s and 70s. And a lot of them are due for a lot of maintenance, and a lot of people are buying them willy-nilly without much thought. Then, so when you start thinking about how people, first-time buyers, more to the point, are saving and saving every single penny, every single dime that they can get their hands on in order to get into the market. And yet this is what we have in the cost of living is just getting more and more expensive. The rental crisis is increasing, as you keep on showing your reports as well, that there's no real stop or break on the rental values going up. So these are things that people have got to take heed on. They've got to heed to and pay attention to moving forward when they're making those big decisions, because As I didn't, I'm not going to bring it up tonight, but I forgot to send it to you. But the at the moment, we've only got 10,024 homes advertised on the domain in the Sydney region under $1 million.
Absolutely. And it is interesting how the media are portraying one set of events happening, whereas reality is something rather different. And, to give you a good example of that, you can look at my show that I made yesterday. This talks about the fact that, no choice but forced to buy units ahead of rate cuts. This was a reaction to an article that came out a couple of days ago, and we'll go into that in a bit more detail shortly, in terms of claiming that units have bubbled up really strongly in all sorts of areas, and people were piling into buying units. But it really didn't tell you the true story or the full story, and we'll look at that in more detail. But it comes back to a much more broad point that people are actually getting caught up in the emotion of trying to buy property, and they're not actually thinking about the critical issues. So, for example, if you've got an older property, the chances are that the insulation will be very low, which means that the energy costs will be quite high to heat it in the winter or cool it in the summer. You'll probably have some structural issues that need to be thought through as well. If you buy new, it's worth noting that home building costs are soaring. This is the most recent from Cotality, showing that the single-story house costs rose by 20% in the year to May, according to Cotality, with builders paying an extra $4,500 to underpin and fortify a new build. Cost of timber rising and cost of labour rising, of course. Well, we knew all about that, but it's continuing. And that's one of the reasons why prices are still out of kilter. It's also very interesting. This article came out to highlight the fact that some first home buyers now were moving towards foregoing big deposits. And, some people are using the low deposit home guarantee scheme. Of course, that's going to be extended in January. But what it means is that the wriggle room that people will have with regard to their deposits could be going down. And in fact, AMP highlighted the fact that low deposits means higher interest payments over the life of the loan and may expose young people to greater risks of negative equity in a poor market if prices of homes fall below the debt total. I think that's a really important point to take account of, Edwin, because people really need to do the work and not just get swept away with these sorts of articles. This is the article that really sort of set the cat among the pigeons. Increased demand sends apartment prices sky high, and they highlight a few different areas where there's been massive rises, and we'll talk about that again in more detail. The problem I've got is that if you look at this, a lot of people are deciding to go a lot further out to try and grab something almost at any price that they can afford without actually thinking about the consequences of those decisions. And I keep reminding people that, you take a decision, but you've got to live with the consequences. And I think at the moment, and I blame the media here, and particularly the various rags associated with the property portals, for stoking this massive story that's not a story at all, and giving a very narrow perspective that really isn't the true perspective at all. And as a result of that, you've got a lot of people being caught. And then this article came up: Generation Boomerang. So this is young adults returning to live with their parents is now becoming the new normal because they can't afford to live and work and own a property. Or here we are, more young people are working multiple jobs to make ends meet. So these are the sorts of things that people need to consider when it comes to trying to weigh out what to do with regard to property purchases.
Yeah, look, and just taking a step back with the cost of construction. So you look at the cost of construction or the new builds that are being put out in comparison to the size as well. Although it's costing more to build your average, let's say your average three-bedroom home, and now it's cost a lot more, but in essence, the size of that home, of that dwelling has gone down from 148 square meters to 120. and so the rooms are becoming smaller. Everything's just yeah, because you've got to make them smaller in order for developers to make ends meet. One of the things that also has made a lot of these prices creep up and creep up a lot is also being the duties and the taxes that developers and builders pay on the way through. Let's not forget that from a new build, you can develop a property, you can let's say build a duplex or build whatever and something new, and then you sell it. But you've got a GST portion of it that you've got to pay, that unless you're going to be trading with the same company again or building with the same company again, you're not going to be able to claim that GST component back. Yes, you can claim the GST on the goods and the services that have been provided as you build. But at the end, there's a GST on the sale, the difference between the cost of building and the sale price, from the profit. So therefore, you've you've got but one choice, and that is make them smaller, make them tighter in order to get the funding, because the banks won't fund developments unless they can see that there is a clear path out, because they don't want to get caught. And this is why I'm adamant that as much as state and federal governments of either persuasion want to build and push for these pie in the sky numbers that they're saying that they're going to be building, or they're going to build, and they haven't even started yet. But it all comes back to high-rise development, and even that's a lot more costlier to build. On average, across Sydney, you're paying $580,000 to build, in a high-rise development per unit. That's an average, right? $580,000 after the purchase of the land. So depending on where you are, is also going to determine how much you're paying for the land, for the lot, for the allotted portion of the land. So it's so unless the apartments are of high value, developers don't want to touch them. Builders don't want to touch them, and also because of the regulations, how long they got to stay in there. So it's not cost effective. It hasn't been, it's not cost effective to build, but we've got to build in order to keep up with the population growth. But the governments don't it's taboo. And unless, when we were talking back in 2019, 2018, 2019, the more was being built then than demand. And again, we go back to the but for the pandemic of 2020. The market was saved, and now and then the Ponzi just kept on going, and things changed. Like I said to one of our clients over the weekend, back then you and I were talking about publicly on the show, and we were talking about how colleagues that owned real estate offices, they were on the third, fourth credit card. And I'm not talking about credit cards to the value of $1,000 or $5,000. We're talking about licensees in charge trying to run a business that had credit cards of 20, 30, $40,000, and they're all maxed out. And again, but for the ban that saved the business, saved the whole real estate industry and in the empire. And look, not only in Australia, but in a lot of other Western nations that we're having similar events. Obviously, some are starting to see the falls in the prices, dramatic falls in prices, but we're the outliners, we're the outsiders in that, because our our Ponzi scheme still being stoked by the immigration lever, and I mean the latest figures of late are that March, April has seen the greatest numbers of immigrants coming into Australia, and we're not building. So this is why, hey, the residential markets are going to, not all markets, because you see the effect of government policy, state government policy, of what's happened to Melbourne. But the markets are where, our backyard, which is Sydney, where we can see the different trends and changes based on the sentiment, and a lot of it is also based on emotion. Plays a big part in whether people buy or whether people sell.
Yeah, absolutely. Emotion is very much part of it. And what I found, I had a couple of one-to-one conversations this part with people who are looking to get into the market, and it's really fascinating having the conversation with them and understanding their motivation. And I understand the motivation. They're in the rental sector. They're paying through the nose for rent, and they've got no security, so they're trying to find a way out of that. But in so doing, they're reaching for potential units out away from the main urban centres with very little infrastructure. They hadn't factored in, for example, the various costs of travelling to and from. They hadn't factored in, for example, the strata fees and the way that they escalate. And interestingly, one of the two had also been exploring the Guarantor home route. And in fact, you put up an article which is very relevant here. So, this particular data from Loan Market showed a sharp increase in the use of Guarantor home loans, with 2/3 of first home buyer clients using the structure. That's up from 50%. And that means a close relative, effectively one or two parents, offers their own property as security as part of the loan and potentially allows people to borrow up to 100% of the purchase price. But there are some risks involved. There's an issue of liability. There's also a risk of getting independent financial advice, etc., etc. But you can avoid LMI. Now, I've always had an issue with the guarantor home route because it puts a lot of pressure on some of these relationships. Bank of mum and dad, as I've discussed many times, is a very significant factor in all of this. But again, I don't feel that prospective purchasers are really thinking hard enough about some of the implications of getting into these arrangements, whether it's the bank of mum and dad or a loan guarantor scheme. And again, it comes back to your point. The emotion is driving decisions. And I'm really concerned that emotion will take you to places that long term will not work out very well.
No, and then you have to ask yourself the question, why? Why have we got to the point where people are driven more by emotion than logic? And that is because the decision makers, they don't give a shit. They don't care because they live in the Eiffel Towers. They get the 400, 300, 400, $250,000 per annum, week in, week out. And then when they retire from politics, I mean, the pension keeps on going and going and going. Not to mention the brown paper bags and the Aldi bags that they get along the way if they're in the local council. I mean, and it goes on, and so that's why I know we say it in jest, but there's two outside of AI and outside of the uh, the computing sector, programming and sector, IT. There's two other industries that young people should aspire for. One is to become a politician, and the other one's to become a real estate agent. I mean, you can't go wrong. You really can't. You really can't go wrong. I mean, or become both. You really the optimum. I always believed, Martin. I always believed that the optimum a career path. If I was to come back into this world as a tradie, I'd come back as a carpenter slash plumber. You've got a down pat. If you're a carpenter slash plumber, I don't care. Change my mind. You are destined to build property on the moon and accompany Elon Musk to Mars and build a high-rise developments up there. You just got to have, if you've got those trades under your belt, you're set for life. You are set for life. That is the cream de la cream of traders, from my observation over the decades. Look, yeah, some say electricians as well, but no, I don't think so because that's, you can, because, a lot of people want to play with electricity. I, for one, don't want to like to play with electricity. I don't like it. I can't see it. I can't smell it. But when you touch it, she bites, and she bites really, really hard. So, but nobody wants to play in the, in shit and in the sewer. Nobody wants, and and nobody knows what you're doing when you're under the house, knocking some floor joists or you're in the ceiling, right? You just, as long as you're tapping away, they all think that you're working. So they're the two Yeah, change my mind, Martin. Change my mind.
No, I don't think I can. I think that's probably right. And what I find interesting is that the you know path you take will obviously determine a lot of outcomes. What I would say to people is don't think that being a YouTube content creator is great. I mean, the amount of effort that we have to put into doing these sorts of things for very, very small returns, it's not anything like as profitable as people sometimes claim that it is. I mean, I suppose if you're a multi million subscriber, but just doing the journeyman work that we do. But we do, I think, make some really important points. And I want to just press on this issue of this article again, because this was talking about increased demand for apartments, blah blah blah. Massive rises. Now, let me just give you a couple of pieces of data to really try and tease this apart, and then we're going to look at some examples that both Edwin and I have drilled into. So, firstly, if you think of it in real terms, we need to think about what inflation has done. So, just so we know, this is from the RBA. Inflation over the past 10 years, in total, is about 25%. So, if you wanted to look at real returns, you need to deflate current prices by 25% to get back to reality. So, that's just the first point, right? And then if you start looking at individual places, and I quoted a few examples where prices were actually pretty wobbly. And one of the ones I come back to, it's pretty archetypal, is North Ryde units. So this is the latest on North Ryde. So if you look at North Ryde, this is the 10-year view of prices. So back in 2016, the average unit was 900,000. It went up to just over the $1 million in 2017-18, and then it dropped back to 700. And today it's about 750. You can see here the percentage changes. So this is the story where prices were a lot higher back in 2017-18 than they currently are now, and they're likely to stay going sideways, I think. So this is an example where what they said in that article is very different from what we see in North Ryde. Now, here's another example, Mandurah. Now, Mandurah was on the list. And it is true that prices are higher in Mandurah, 480, give or take, maybe slightly higher, slightly lower, depending on the property. But if you look back over 10 years, it actually dropped from just over 300 down to 270, and then it went along the bottom and then slowly rise and has accelerated more quickly. So here you can see the percentage rise has been quite strong recently, but by the way, it's coming back a bit now. And if you look over the 10-year period, it's a very different story. And again, I'll just look at another one, Geelong in Victoria. So here, 10 years ago, 450,000, reached a peak in 2022 of 650,000 and is now around 600,000. And you can see there that we had a massive run up, then massive fall, up, down, and then a very slight rise at the end. So, the truth is that you can't just grab this headline and decide what you're going to do on the back of it. And by the way, if you want more information about the mapping and financial stress, check out my live show tomorrow. I'm going to be looking at the data in more detail, and we'll be able to look at particular postcodes and things like that. So that's my contribution to the debate. Now, Edwin, you also, in parallel, did some very interesting research as well. And we're going to put that up now because you've also got some interesting stories looking at specific Sydney suburbs.
Well, yeah, look, I got tagged onto a post. I don't know why I got tagged into it, other than, just got tagged into a post from the post that was boom to bust, from REA. And I think Divine put that out. Can't even remember. So what I did was I took out some of the suburbs and did a snapshot of the values from 2016, 2017 right up to now for both homes and apartments to get a better idea and to basically to fact check the author of the article. And it was interesting to see. First of all, the premise is hey, hooray, hooray, hooray! Like go out there and start buying because home prices are falling by 16% or 12% or whatever the headline the subheading headline was. But yeah, well, okay, go out and buy something in Vaucluse. Yeah, not many people have got. I don't know about you, Martin, but Dusty and I, we don't have $6.5 million, regardless of the fact that Vaucluse home prices have dropped 21%. In 2025, from 8,100,000, the average home, to 6.4. But when you look at apartments, yeah, there certainly has been a drop as well. But you're still looking at the average apartment price there, which is typically taken over two bedrooms. Yeah, you still got to fork out $1.3 million on average. So so looking at the values there, then you've got Manly houses. Yes, they're falling as well. Another top end suburb, and then you've got Manly apartments. Yes, the trend is that apartments are falling, but there's been also some huge rises in house values across some of the markets. Like you've got Gordon, for example, which these are suburbs that the author takes back as saying that they've fallen by up to 780,000, or on average about 12 to 16%. And this is where people have got to be very, very careful of these helicopter views, these aerial views of Sydney, of the markets, and more to the point when the mainstream, because you don't know what wheelbarrow they're pushing, right? Other than, most of it's just crap. But so, I mean, I can see some of a number of the suburbs, the home values have come down, a great deal, but we're still up there. The values are still very high. But Gordon, yeah, it's had an increase of 64%. Within the last 6 to 12 months. That is phenomenal for home price. And then you've got to start really analysing it a little bit further, Martin. And you've got to ask yourself the question, why? Why are they so out? Why is it that there's, we're noticing a 64. One, the number of homes that got sold, right, is one factor. The other one is the type of home, and then if you look at the actual listings that are being sold that have pushed these values up, you find that they are now listings that are in the most part are development potential. In other words, the areas are being rezoned, and they have now been increased in value dramatically, right? So if we look, and that's so what I'm trying to get at there is you've got to. It's not a matter of just reading the numbers. It's also understanding the trends, and how how think as I call them, how the sands are shifting, the demographic changes, who's pushing the markets, and the history of those markets, and what is the demand? Is it a developer demand? Is it a foreign investor demand? Is it a local investor demand? Are they close to central hubs where a lot of foreign students are gravitating into because of the ethnic, the language, the shops that have sprung up in those areas? So uh, that's why I find it interesting. And the other one, the last one there is Strathfield South. I mean, you could say, gee, I'm going to go down and buy an apartment in Strathfield South. I mean, that's not, I mean, that's still the inner west, right? So, and the average apartment price there is $587,000. But yeah, you go and try and buy there, and most of the apartments in Strathfield South are still somewhat housing assisted, residencies that are there. There's very few. New builds or anything that's been built over the last, I don't think anything's been built there over the last 10 years. Most of it's more than 10 years old. The last build was finished about 10, 12 years ago. But the majority of them are really old. And as I said, in what we would, normally say as housing commission blocks of government assisted development sites that you wouldn't want to live in anyway, because I mean and they're due for maintenance, and they're also built in the 60s and early 70s. So these aerial helicopter view analysis or stories, people have got to really dig deep into the numbers, as I keep on saying. It's all about the numbers. You follow the money and follow the numbers, and then you start getting to the bottom line because and you start coming closer to the truth. But when you just can basing your decisions on emotion, again, whether it's to buy, whether it's to sell or rent, well, then you start off behind the eight ball, and you're not starting on the right foot.
Well, absolutely. And I wanted to highlight again, Edwin, that a lot of the content online and a lot of the content associated with the property portals, directly or indirectly, are written by people who have got one objective in mind, and that is to get clicks, that's to get eyeballs, that's to get people talking about what they're saying. And they will use data relatively freely, but always at an aggregated level and always without any analysis of what's actually going on the ground. And things like, for example, well, how many properties actually did sell? How many properties never actually got listed? People were thinking of listing but didn't list. I mean, there's a lot of other questions. And what you'll also find, of course, with the averages, that depending on the mix of property that actually is being moved, whether it's new apartments, old apartments, how many bedroom apartments, etc., studios, etc., you cannot actually just take those high level statistics and then try and use that as a lever to make a good decision about should I buy or shouldn't I buy, and where should I buy and what should I buy. And what we've tried to do on this show over the years, and what I try to do more generally on my channel, is to try and help people move beyond that emotional, oh, I've got to buy something, I've got to buy it now, right? To say, well, let's just think about this. Let's just make sure that we've got the right pieces of thinking in place, which is about what are you really wanting? Why are you wanting it? Why are you looking at this particular location? What are the characteristics of that location? What are the characteristics of the property in that location? What is the economics in that location going to look like? And if you're buying apartments in particular, what are the stories with regards to the owner's corporation and the maintenance and all of those things too? And if you are deciding to go buy off the plan, for example, and some people still are, given the current problems with the builders and with the costs of construction and all of those things, you can bet your bottom dollar, I think, that quite a lot of the property that's being built now is of ultra low quality. And in a few years' time, the costs of maintaining that will be skyrocketing. So, these are some of the factors to bear in mind. And I'd also highlight, Edwin, and I think this is something which we have to come back to. If you look at what is actually coming on the market at the moment, it's really very interesting. There are a lot of properties that I would not put in the A bucket at all. I'd say they're B class and C class properties, maybe ex-investment properties, maybe they're properties with defects that need to be fixed. So quite often, what looks superficially like a reasonably priced property, when you peel back the onion and realize what you'd have to invest in it to bring it up to scratch, then that changes the economics too. And again, what I find is that people don't do that thinking of the right cycle. And hopefully less people now get caught up in the auctions, because we've been preaching the auction mantra, or be careful about auctions, and we'll come to that in a second. But the point is, unless you do the work on the way in, you're going to get caught.
Yeah, and this is where again from the show, from the free advice that we've been given over the years, and also as people have reached out to me, through various platforms, and through the ad that we run on Walk the World for assistance, if they need professional assistance with finding a home in a rental property as well, or even assistance with preparing a home for sale, so where you get the best result on a purchase, on a sale, or on a rental. We're there, and when you say, oh yeah, you're pushing your wheelbarrow. Look, it's cost, to be quite frank, doing these shows with you, Martin. Since we've been doing these shows, these live shows since 2018, 2019, I can tell you it's cost me a lot more business than what it's made me, because of the fact that, one, we've educated our audience so well that they don't, in a lot of the cases, they don't need the services of my office, and or people just become people have become the wiser. But there are a lot of others that you still need to hold their hand. You still need to walk them through it because of um, circumstances being abroad in the state. Time poor and everything like that. They don't feel comfortable. So we're more than happy to assist them with that. And I say that we even assist people with obtaining or getting rental properties. It's not just about buying; it's also about helping them to establish uh, a property where they can feel comfortable living in, albeit for their rental needs as well, and themselves and their extended families. So yeah, look, and people have got to. The unfortunate thing is that the industry has also moved in the direction of seemingly being on the side of the purchaser by providing all these BS reports, so-called cheap reports, and I'm referring to before you bid and before you buy. Reports that you get, and you pay anywhere from $45 to $65, and then if you're the purchaser of the property, you fork up the rest, the balance of the 550 that they charge. But that's given people a false sense of security because they don't see the underlying issues. The fresh coat of paint, the scented candles that they burn at the open houses is all masking. And this is critical of why people should be need to really take a deep breath and take a step back, because this is where they get caught out. And as we said earlier on in the show, it's not just about getting assistance, family assistance to buy a property, but let me tell you, regardless whether it's the bank, whether it's the family, assistance, or whether it's the government through joint venture agreements with the government. You may get the funding to get into the purchase, but they're not going to fund the restoration or any future issues that you will have in the short term with the property that you purchase. I know a strata company that is masking strata reports, and this is borders on the line of criminal. They're masking, and they will not put to paper the fact that the apartment building that they're managing has got major defects, including flammable cladding. That they just they and this is from I was listening to the story, and the selling agent was trying to get further information, and the strata manager would not put it in writing as much as he demanded it on email because fear of retribution from other residents in the building against the strata manager, and she could be sued. But I mean, so this is the stuff that people, as much as you've got legislation and regulations, Martin, unfortunately, uh, uh, the real estate industry finds 6 ways to Sunday to navigate around the regulations and the legislation and circumvent those critical points that the government is trying to address. But we won't, and hence the reason why, after 30 years of trying to tackle underquoting and bad advertising and deceptive and misleading marketing campaigns by way of auction campaigns, we still got the problem. And if anything, the problem is getting worse.
Yeah, it is, unfortunately. And I think it's getting worse because there is a bit of an air of desperation in some parts of the industry. And of course, also with the bigger price ticket on many properties, the value of transactions are also higher. That means the commissions are higher. And so the aim to try and grab some of those commissions gets higher too. And I think the degree of collusion is also higher as well. And I've had a couple of encounters relatively recently with agents who were actually in collusion with the buyer's agent. And so the prospective purchaser was getting information that wasn't actually accurate. And everybody knew other than the prospective purchaser. Luckily, I was able to throw some questions in, and as a result of that, they got the solicitors to do some more work and discovered a huge gaping hole in the story that was being portrayed. But the buyer's agent and the real estate agent were in cahoots.
Yeah, and this is where you've got to really be. Yeah, this is what you've got to be careful with a lot of a lot of that, and it's not only colluding in the industry itself, but it's also you know the it's no different to it's the yeah, because of the deregulation, right? And as I said before in the show, when you got building inspectors reports or the building inspectors when they deregulated that industry in 1989, uh, you basically you hung your balls on the line when if you didn't justify your report, if you weren't going to stand behind your report. But now it's just become a visual, and if it's not critical to the point of the property being uninhabitable, technically you don't have to report it. So what does that tell you about the building inspection reports that you get from real estate agents that are willingly handing them over, or you can download them from domain or area the websites if you're interested in the property. They're very light on information, and the building inspectors are not going to bite the hand that feeds that feeds them in the first instance, because they don't get a lot of money anyway. And the other thing with regards to that side of the deregulation was the fact that it meant that you didn't have to be a builder, you didn't have to have a building certificate or any type of building license or a certificate of in that area to become a building inspector. And now we've got more people that have left sales and IT, the IT sector and sales, becoming building inspectors and buying franchises from different groups. They're the ones doing the building report because it's just a cut and paste and tick a box. No different to the caliber of property management. And as I said earlier on, strata managers and everything else. So you have to be really, really diligent and question everything about the property. Most agents don't know what they're selling. Not all, but most agents don't know what they're selling. When I got trained, my licensee in charge, I don't know if he watches the show because I've lost touch with him, but David Horder, if he's watching the show, that was my first licensee in charge, David Horder. He I spoke to him. He was living in Queensland. So if anybody knows David Horder up in Queensland, it was a tough, a tough licensee to be trained under. He was also a certified practicing accountant, and he ran a Lang and Simmons office, I believe, from memory. It was in over in Potts Point in those areas, and it was tough back in the day. And he was the one that trained me, and whenever we listed a property, he made me go to the council. He made me, and it was different back then. You had your I can't remember the name of them. You had everything was on those different type of screen. We didn't have the computers and AI like we have got now, but you had to get old those I can't remember something,
Microfiche, microfiche.
microfiche. That's it. And you had to get that stuff and go through and understand, and you really had to know. But that was the standard that we got trained under, because also the regulators expected that standard. I recall in my early days, Martin, I was trying to sell an apartment, and I showed on the earlier version of REA, the realestate.com portal. I showed a photo of the grounds of the apartment complex that the apartment was in. And, I mean, it was just the grounds. It was just a photo of the grounds, but somebody had made a complaint that that was not the view from the balcony. I mean, I had to write a 3-page essay as to why I did that, and and I'm sorry, but I won't do it again, type of shit. Nowadays, you get away with so much, and it's in your face, and you're making gross incomes of 5, 6, 7 million dollars, and fair trade in New South Wales only fines you 22,000. I mean, what does that do? That does nothing in terms of when when you start comparing it, and not because what you got busted for misleading, for bait advertising or underquoting, and the fine's $22,000 across how many properties. I mean, this is the state that we're in, and this is what people have got to step back, take a deep breath, and if you need help, put your hand up, and we'll find ways to help you.
Absolutely. And on the angle of attack about understanding how the industry works, we should touch, I think, just briefly on the whole dummy bidding thing, right? Dummy bidders are actually a significant part of the industry. And you've started to suggest that, well, maybe some of them are on payrolls.
Well, it's not just a suggestion, Martin. I've got the receipts. I have got the receipts. I've got people in the industry that have privately texted me and told me who's on whose payroll, and I've put it out there. I put it out to fair trading and that, but nobody wants to listen. The reporters don't want to know about it. I don't know why. And the other thing there, Martin, is that they're not called dummy bidders anymore. By the way, you've got to you've got to really come in with a trend, Martin, and you've got to be politically correct. You can't call them dummy bidders. For God's sake, Martin, you're going to get deplatformed. You've got to call them NCBs, non-committed buyers. They are now. God, if you call somebody a dummy bidder out, you're going to get a smack across the the knuckles, Martin. But this is what happens, and it's interesting to note. And one of the well, look, I'm not alleging that in this case there was a dummy bidder, but I can that I know 100% with this particular property over in Pemulwuy. But I had my suspicions on the day. I was actually there. We were going to bid on behalf of our client on this property, but after the research and discarding the building report that was provided by the agent, and we went in and did our own due diligence on the property. One, the agency wouldn't or their solicitor or the vendor wouldn't come to the party with the occupation certificate of the basement living space that they've carved out when they were building this particular home. There was a lot of issues there. There was the report didn't pick up on moisture readings that ours did. There was nothing said about all the water ingress from the windows. I mean, the list goes on, right? So we backed off, but we attended the auction nonetheless. And look, again, it's another story in false light. So if our followers and our viewers go to my X handle, they'll be able to see, and it spells it out. It spells it out from the history's there, and you can see it snapshot by snapshot to the current price that it's being listed at from what it was, and what they got on the day, the offer that they got on the day, and it was rejected, which is close to $200,000, more than $200,000 below what the guide is at the moment as a private treaty.
Yeah. And I think this is really important to understand, right? There's a lot going on below the waterline. And again, people who are not actually really across the detail will sometimes be misled. I'll put no stronger on than that, but misled into doing things that don't make a lot of economic sense at the end of the day. And it comes right back to this issue of emotion. If you are actually in an auction and you actually are getting swept up in that emotion, the chances are you're going to make bad decisions. And that's why it's really important to do the work, make sure you've actually got all your ducks in a row, and make sure you're also clear on what the real value of the property is in the circumstances that you're working with. And be careful about where you get your information from. and be careful about who you trust. And just remember, not everybody is there to look after your own interests.
I'm waiting for the day, Martin. I'm waiting for the day. Like what I'm seeing a lot at the auctions that we've been attending, as we survey the markets and get a glimpse of what's going on. Not necessarily participating in the auction, but just keeping an eye out on who our competition is for for those particular areas. I'm noticing a lot of agents more and more so now than before. Yeah, where one of the agents is allegedly on the phone with a dummy bidder. I'm waiting for the day that I get to an auction and I've got the agent's phone number that's on the phone there, and I'm going to call him. I'm going to.
Oh yes, the old
I just
pantomime. Yeah, I'm
I
really
just
on the
haven't.
phone to somebody. Honest. Yeah.
Yeah. I've been waiting for that opportunity. The opportunity hasn't arisen yet.
Mm. Well, I've actually seen that done a couple of times, where in fact they got the phone up to the ear and then the phone rings, and I think, oh, that's interesting. So there you go. All right, well, let's look briefly at the numbers because the numbers don't lie in the same way that some parts of the industry are lying at the moment. So in Sydney on the 9th, 20,187 properties, according to Domain. Jump forward to the 16th, 19,973. So a little bit of a fall there, although the mix is pretty much the same if you look at the way the trends are going. And this is your trend chart, which shows that we're still leading ahead of where we were this time last year, but just moving slightly, as you'd expect perhaps in the middle of the winter season.
Yeah, and look, they could fall a bit more, but again, we're still uh, 3,000 somewhat properties more on market than what we have. But the ones that are coming on market, as you were saying earlier on, your B, C, and D type properties in terms of when you start classifying your A class properties, they're not coming on, or and if they do, they still demand a very high price in both apartments as well as in freestanding homes.
Yeah, and I would make the point that there is some contention amongst the various online media articles about what the listings are doing. So there have been some suggestions that listings in Sydney are quite a lot stronger, and they are. But if you look at the trend, you can also see that maybe it's a little bit of a spin there. And again, it goes back to, well, yeah, but what property is actually on the market, and how good a quality is it? And unfortunately, a lot of it is not. If you look at the Melbourne story, on the 9th, 26,338. Again, 14,300 were houses there, and jump forward to 25,859 the following week. And again, 14,000 plus houses. So a lot of houses relative to the other there. And, it's a bit of a similar story, I guess, if you look at Brisbane. On the 2nd, we had 3,593. On the 16th, 3,454. So that's the sort of what you'd expect at this time of year, possibly. But if you look at the auctions, this is quite interesting. Now, of course, last week we had the King's birthday, and so that distorted things. And of course, there was a lot of booming in the markets, reporting saying, oh, the clearance rates are higher this week. Numbers are up well, of course. But Edwin, your numbers don't lie. This is the real story, isn't it?
Yeah, that's it, Martin. So what happened? So we're still at we're lower than what we were the long weekend over the long weekend. The to me Martin, it's a combination of a number of key elements. One is agents are reluctant to take properties to auction because they've created a rod for themselves. They've told the vendors that they're going to get 2.5 for a property that's only worth 2.2, and that's one, and therefore the agents themselves know that they're not going to achieve that, and therefore they won't list it. That's what I'm getting a lot of, across the board from some of my colleagues where they go try to get the listing at a lower price, but they say, oh, but so and so from the other agency said it was worth $300,000 more than what you're telling me. I'm waiting for them to list my property, but they don't come back. So that's one of the issues. Two, the main issue I think is that vendors are also seeing what's happening in the local areas, seeing what's happening in the local with the local auctions in the local markets, and they're seeing the carnage there, and they're waking up to it. They're becoming more and more educated because if you look across the 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, you look across the 12 weeks, we have had a great deal less uh, uh, auctions in terms of numbers than 2024. So as I put in my post and on Xmart, and so basically sentiment from vendors is dropping a lot. The agents BS that they've been propagating that they could get inflated by the listing, it's biting them in the ass because then they're not getting the results. So it's having an opposite effect to what they want on the day because the vendors are not being crunched as the industry says. You've got to crunch the vendors to accept the price on the day. They're not being crunched, and so the marketing campaigns are blowing out. So it's more or less costing the offices more money than what they're getting from the vendors up front. So the vendors are being educated. Sentiments dropping, and this is what we have. So what's the overall total effect of this? I believe, and I'm calling it that the confidence in auction campaigns, as I put in my post, because of the loss of confidence in the auction campaigns, auctioneers are going to have to go and call bingo numbers at retirement homes and RSLs. So that's going to be the side gig, Martin. I'm calling it. I'm calling it now. Today, the 16th of the 6th, 2025. There's going to be a surge of inquiry at retirement villages, retirement homes, and RSLs for auctioneers to call bingo numbers as a side gig in order to survive 2025.
You heard it here first, folks. Excellent, Edwin. And you've just got one other chart which is worth exploring just briefly. This is actually the tracker that you produce, which is showing the Sydney homes, Sydney apartments, Melbourne homes, Melbourne apartments. And interestingly, the story with regards to Sydney apartments is a bit of a downtick. The story with Melbourne apartments, a bit of a downtick, whereas homes going up slightly.
Yeah, and that's a given. Because of look, over the last 2, 3 weeks over in Melbourne, we've had a huge drop in terms of numbers. When you look at the numbers that we were tracking for Melbourne for listed on market, like something like 14,000, and but 3, 4 weeks ago we were closer to the 18. Now we're at 14. So is the market there in terms of is it going to turn? I mean, also I've been hearing some chatter by Catherine Cashmore that watches over the Melbourne market, and there's been a lot of confidence and there's been some big results, and from her chatter. And our numbers that we gauge on a week-to-week basis, is the market about to turn? Because has it hit the bottom in the way? Because of the fact that 3,000, pulling 3,000 or just over 3,000 in 3 weeks off market from the market, on market ledger to taking it off market is a lot of property. If that happened in Sydney, we'll be back to 2024 numbers, and there'll be a FOMO running left, right, and centre in Sydney. So it's an interesting from what the numbers are showing and the sentiment is displaying, but I would say that the apartment market in Melbourne has become a lot more steadier and in a way a lot more in demand than the apartment market in Sydney as well. So we're sort of everything's sort of opposite ends from where we were, a year ago, 2 years ago.
Yeah, absolutely. Well, I certainly think that, of course, Melbourne prices did, go down and sideways more so than Sydney. But I also still highlight the fact that some of the property that's still being listed in Melbourne is not necessarily A class either. So that's something just to
That's
bear in
correct.
mind. Yeah. Let's just look at the rents. So in Sydney on the 9th, there were 11,726 properties available to rent, according to Domain. On the 16th, 11,920. In Melbourne, on the 9th, 11,886 and 11,980 the following week. So a slight increase. We're sort of going through the Melbourne winter season there as well. But interestingly, again, going back to my one-to-one conversations, I'm still getting stories where existing renters are being asked to pay more for the property they're in at the moment. So these rental increases are still filtering through, but because they're actually for people in rental accommodation rather than advertised rents, those rent increases aren't actually being reflected in the advertised data that people like Cotality and others are actually reporting. So it's really important to understand there's a gap in data between real rents and advertised rents.
Yeah, and the other thing that people have got to also understand and factor in is the cost to move. At the moment in Sydney, parts of Sydney, we're looking upwards of $260 per hour for an average Pantech truck as a removalist. That's what you're paying, and you start paying the 260 per hour from when they leave the depot, when they leave wherever the truck is parked,
Yeah.
right? So if you've contracted somebody in that lives over in Gordon and you're moving from Cabramatta to Liverpool, well, you start paying the tab from when they turn the engine on over in Gordon. So that's what. So when you start looking at those sort of costs, and yeah, that let's say they started at 7, um, you more or less finish the moving by 2, 3 o'clock. So that's one cost. The other cost from a rental perspective, Martin, is the average home or property to get it cleaned properly so that you won't have any comebacks is clocking $750
Yeah.
on average. I mean, there are some properties that people are paying 1,300, 1,400 when you're talking about 3 bedroom, 4 bedroom homes. And depending of if there's also there's a bit of that. So the cost to move, as you say, is very, as we've said before, is very high. So therefore, they will absorb the extra $20 a week. They will absorb the extra $30 a week because it's going to cost them close on to $5,000 to move.
Absolutely. And it's interesting, there was an article earlier on that highlighted the fact that we've got massive amounts of costs coming in because, of course, in 1 July, you've got energy bills going up, you've got internet and phone bills going up, you've got insurance costs going up, including health insurance and also costs of comprehensive car insurance and building cover, etc., etc. So there's a lot of significant price rises coming through at 1 July. And again, that's putting more pressure on households. I'll be covering this a little bit more in detail tomorrow because, I look at households' cash flow, money in, money out, and therefore I'm interested in all the other expenditures that people are actually worrying about. And of course, there's now the talk about whether, in fact, the conflict in the Middle East, which is, now flared up, whether that's going to have an impact on oil prices or indeed LNG prices, both of which could actually squeeze households even more and might put pressure on inflation. Although, interestingly, I've had a few people argue, well, oil prices might go up, but the RBA ignores the extremes of movement, so maybe it won't hit the core inflation calculation. But I'm not as convinced as some on that. So I think there's some really important points here with regards to the real costs for real people, rather than the generic data that people are quoting. And so often this data is not actually giving the real picture when it comes to what households are actually facing. And not all households are in the same boat. And I always come back to this. There are some households that are doing really well, have had big pay rises, and don't necessarily have a mortgage, and they're doing fine. But I'm worried about those in the rental sector, and I'm very worried about those who are actually struggling with a mortgage, or more importantly, those who are thinking of getting a mortgage and trying to step into the market because of this expectation that home prices are going to rise because rates are coming down. And if I don't get in now, I'm never going to get in. It's really important, as we've said earlier on in the show, to make sure you don't just get caught in the emotion. Before we go, you've got a little story, which is all about not judging a book by its cover.
Yeah, it's all about that, and the perception, how people perceive you, right? So, well, one of my bugbears in a lot of areas, in a lot of agencies are doing it more and more, is that when they ask you for your details, they ask you for your phone number, name, and then they ask you for where are you from? Uh, you know, uh, so I figured, I had one of those days, one of those mornings, and so I said, look. When the young lass said, asked me for where I was from, and I said I was from Mount Druitt. So, yeah, to see her reaction. I mean, I've done it before in over in the West, and after that, she didn't want to name me, and then I figured, you know what, that's a great strategy. Because when I asked her for the price guide, she was, reluctantly told me it was the price guide was around 2 million. Looking me up and down, so as to say, well, but can you really afford it? And but one of the good things about it, Martin, is that maybe I've come across a good thing, and that is that regardless of how I was judged on the day. She left me alone. The real estate agents left me alone. I was able to walk freely throughout the whole house, got under the house, walked through the back, opened this, closed that. They didn't want to approach me. I don't know whether it was fear of the stigma of Mount Druitt. Yeah, did I look like I was from look like from I was from Mount Druitt? So next time I'm going to say I'm from Cabramatta to see whether we get the same reaction, or Dooney or whatever.
Well, yes, maybe she'd seen the show, Edwin. Maybe she recognised you. I tell you what, there are a number of real estate professionals. I put that in inverted commas, who actually do follow the show, and they follow it because they're rather interested in what we're talking about. But more importantly, of course, they're concerned that we're throwing a little bit of a spotlight on practices that they prefer to be kept in the shade. So it's not surprising that sometimes we get some negative reaction in the comments from certain sectors. But the point is, and I want to sort of highlight the fact, we are just making sure that people understand how the world really is, rather than how it's wrapped up and presented with a nice little bow on all of those articles and all of those, home shows and everything else, right? This is reality, and it's really important that people understand.
Yeah, that's right. That's all we can do, man. That's look. As I said earlier on, look, it's in often the case, it's cost me more than what I've made personally, than what I could have made personally. But hey, I want to go to bed, and get a good night's sleep. And God forbid that we fall into into those shenanigans, those practices. But it's not just. And it's not just recently. It's not since we've been doing the show, since 2018, 2019, that I've been vocal about these things. Even before that, when I had the office in Parramatta and in Strathfield, I'd put out. You only have to Google my name and look at articles that put out on Property Observer and everything else. I mean, look, I've even had developers make all sorts of threats over the years because I've called them out. So yeah, it's that's who we are. That's who I am. That's who we are. And you're not gonna change me. And if you want to change me, let's call the time and place. As long as there's an octagon and we can wear 12-ounce gloves, I'm all in.
Well, the point is there that this is a really important conversation, particularly now, because unfortunately, I do feel that when people are being deceived, and they're being deceived to line other people's pockets rather than actually getting the right outcome for those people who might be buying or selling or attempting to do that. So, Edwin, thank you very much as always. Really important conversation. And I'll look forward to seeing it all again next week when I'm sure there will be even more shenanigans to discuss. So we'll see you then.
Yeah, see then there'll either be more shenanigans or the market will start warming up and I won't be wearing a scarf.
Okay, well, we'll wait with interest to see. Take care. Bye bye.
Take care, man.